Welcome back to the ETF Inspector. It's Sunday, November 2nd, a little after 1 o'clock in the afternoon, and this is our week look ahead and payment guesstimate video for YieldMax's LFGY, the crypto industry portfolio option income ETF, and we will also cover a little bit of blocks. That's XFUNDS Nicholas crypto income ETF. Reminder, I'm on X at ETF_Inspector1. I'll let you know when videos premiere, announcements about the ETFs, all kinds of good stuff like that. No, nothing else, just ETF related posts and content. All right, we'll start off by taking a look at LFGY throughout the week. They were actually down 3.5%. Now, a portion of that is that 58.71 cent distribution. But overall, they were actually still more than that, down about $1.30. So a little more than half of that is share price decline. So not the greatest week. Over the month, down 4%. Over the 3-month period, down 0.7. But there's also about 12 payments in there. So you're doing just fine over a 3-month period. That's kind of why it's not always the best to focus so much on one little time period and then change your investments. Not that this is investment advice. I'm just giving you information, but you'd be better off picking something that you like the strategy, and you like what they're doing, and then you understand that there will be ups and downs. If anybody finds any investment that only goes up, please let us all know. You're not going to find it. Okay, and we will talk a little bit about blocks as well. So we'll look at them for the week, down 4.7%. We do know they paid about an 18-cent distribution, 26.48 down to a 25.23, down, what did I say, 58.48, $1.25-ish. So they actually had a rougher week, obviously, than LFGY was. That's not very common, but we'll look into what they've got going on under the hood. But bigger picture, they're up over the course of the month. Over the 3 months, 6 months seems to be, they haven't actually been in existence for a full 6 months, I don't think. But they're doing very well. If you got in right at the start with blocks, you are up 30+%, and you've received a 36% annual yield distribution every week. So doing well on that side. Okay, let's start off looking at LFGY. They're trading for the week. They made approximately 205 trades, which we went over on a daily basis throughout the week on the days that they were making those trades. All right, so we don't really need to go into the details on them again. There was no trades on Monday, so $0. On Tuesday, they lost $16 million trading. Wednesday, they brought in 1.3, almost 1.4 million. Thursday, they lost 301,000, and Friday they made 208,000. So overall, trading wise, it was I don't like the way I numbered that, to be honest. I got thrown off. I'm just now catching this. I got thrown off in the beginning of the week with that Tuesday trade. It's the only trade. And what this was them basically purchasing a deep in the money call. It's a $10 call on IBIT in place of owning their shares. So I don't know that we call that a trading loss. They purchased basically a synthetic. If we removed that, all of a sudden they made 1.3 million on options trading. So sorry that I'm live time processing this. I don't know. Similar to buying of shares, I wouldn't call a loss just because you spent money. Like on these days when they were buying Circle or something like that, I didn't call that $1 million loss. So they switched over all their shares for a synthetic instead. So I am going to, and it's my show, I can do what I want. So I'm going to not call that $16 million loss on that transaction. And we'll just have to remember that when they close that out, we're not going to call it a $16 million gain or whatever it is either. I'll have to scroll back and find this to figure out the difference. So with that being said, they actually made $1.3 million in trading for the week. Now, their share values also increased and decreased on a daily basis throughout the week, moving up 7.4 million on Monday, down 4.2 million on Tuesday, down another 1.6 on Wednesday, down another 9 million on Thursday, and then back up about half of what they lost, 4.4 on Friday, for an overall downward move of $3 million. So if we were going to make our estimate with that $1 million credit, it would come out to 20 cents a share, 20.15. Like we said, last payment was 58. If we scroll through a nice little list of previous payments on their website, 58, 57, 58. We've got some 51, 43, 51, 46. There's a 37. I'm not going to keep reading every single one of them. 37 looked like it may have been the lowest ever. So we don't think that's the case. The fund doesn't seem to be struggling, not in trouble. So we definitely don't think we're going to be doing 20, let alone even trying to break the low. So next they tell us to go check out the IV, that's the implied volatility of the fund. To do that, let me make sure, making sure I typed in the right numbers. I like to use Market Chameleon. And if you were in the live chat for the Ulti video, I feel like I need to reach out to them, try to get a sponsor deal or something. I mentioned their website, and people have said they never heard of it before. So Market Chameleon, if you're watching, let's make a little deal, put a little commercial in here. So Market Chameleon, a nice, easy way to get lots of financial information, including 30-day IV. Now, I'd really love to get a 7-day IV. There's not a great website for it. And realistically, the traders are using the IV at the time of their transaction, which would be more like instantaneous. So, but we're just trying to get a ballpark. And so what I've done is weighted how much money is in the underlying I'm speaking of compared to all of the underlyings, so that separates out the option money and it separates out the cash and government obligation funds. So it just pits these, 24 underlyings against each other. That being said, 3.1% of the money's in bullish. Their implied volatility increased this week to 79.9%. Bitmine immersions got a little over 3%. They decreased, but still high, 104.7% IV. BitDeer, over 100 still after the decrease to 101.2. They have about 4.2% of the money. Cypher with 4.1% dropped, but that's real high, 147.9% implied volatility. So if you're not familiar, not that this is the perfect definition, but just implied volatility is going to give you an idea of the potential. I don't even know if I should say potential because anything has any potential, but based on the 30-day history, the potential swings in the share price of the stock. CleanSpark, 4.1% of the money, 111.9% is a decrease, but that's still real nice and high, helps bring in extra premium. Coinbase, 6.7% of the money, that's a little bigger than what some of the others were, 60.7%. Before I get all the way to the end, let's scroll down. 6.78 looks like it's going to be the high. The average is going to be 4.35. So they are fairly evenly allocated. We're getting a lot in that 4%-ish range. But Coinbase is the largest among the 24 holdings. Core Scientific, 4.8%, dropped to 84.8 on the IV. Circle, 3.2%, 108 is a decrease. iShares Ethereum Trust, 4.4% of the money, dropped to 69.7% IV. Galaxy Digital, up over 100.4% with 4.3% of the money. GameStop's got 3.2% of the money. They increased to 53.5. Robinhood, 6.3%, so that's on the larger side, increased to 72.4. Hut 8 Corp, big increase to 131 plus percent, 4.7% of the money. So now we used to have iShares Bit, where we had shares and we didn't trade any options on them. Now we trade options on them and we don't actually own any shares. We've replaced our shares, like we were just talking about on the last page, with this deep in the money call for December 19th, and then they're selling options off of that. So this basically, what would that represent? 258,100 shares. So then that allows you to sell 2,581 contracts, and they're trading call spreads on that. But IBIT dropped this past week to 42.7. Mara, 5.5% of the holding, so that's a little heavier than average. 98.9% IV is an increase. Mercado Libre, 3.5% of the money. 35.7% is a decrease. Strategy or MicroStrategy, 6.5%. Again, one of the larger ones, increased to 61.1%. NU Holdings, 4.6% of the weight. 47.3% IV is an increase. Another increase to 47% on NVIDIA with 3.2% of the money. Opera's got 4.2% with 49.5% IV. That's a drop. PayPal dropped as well, 37.7% on the IV with 3.3% of the money. Riot's got about 4.25% of the weight, 97.6%. That's real nice and high. It is a drop. SharpLink Gaming, this one's fairly new, came in the last week. SBet, I'm not familiar with them, but 3.4% of the weight. It's a drop to 91.6% IV. And finally, Block increased to 66.9% on their implied volatility with 4.5% of the money. So to sum it up, 10 of the underlyings increased in their implied volatility, 14 decreased, and that overall decreased our weighted average on our 30-day IV from 81.16% last week to 80.63% this week. We take that calculation, we then combine it with our closing share price on Friday, and then divide by 52, and we get a 54.83 cent per share distribution. From there, we're just going to make our final guesstimate to try and see where we think it's going to land. And in this case, I put 53 cents. So I think it's going to be less than the last two. I think that's what we said. I know last one was 58, 57. So less than the last three, but not even, not below the first one from October. All right, so that's tough because for the most part they were paying about a 65% annual yield, but then recently they started paying higher 80s. So I could be missing by a good bit if they go back after having a down week. If they go back to a 65, I'm going to be off by a good bit. So what would? Oops, didn't mean to do that. Man, what would 45 look like? I mean, we could see possibly like a 44, 45. I'm going to stick with my, 53. I'm going to stick with my 53 just because the implied volatility is still nice and high. But just understand there's a possibility of like a 44, 45. All right. When we take a look over at the holdings now, we're going to take a look at how far in or out of the money the calls that are sold for the week. They trade a covered call strategy 99% of the time. If there's something different, I will point it out. Everything is basically for this Friday, unless I point out differently. We do have MBTX that trades, IBIT's got that long call out till December. MBTX has a put spread out till the last day of the year. And then Opera also, I don't believe there are weekly options on Opera. I've never looked into it, but I just know every time they roll it for a month. Other than that, everything's for Friday, November 7th. Bullish calls are sold at $57. They're 12.7% out of the money. If there's another line there and it's not highlighted, it's a long call. So basically, it's a call spread. This would be considered a $5 spread. I just don't highlight and spend time talking about the call, the long call, the purchased call. That's basically a sort of protection, not downside protection. It's upside protection. You wouldn't think you'd need upside protection, but if you sell a call and the price runs beyond it and you don't have a long call, a purchased call on the other side of that, then you have no limit to how much you could have to pay to close it out. Now, on the other side, if you trade options yourself, you could always just allow those calls to get assigned and the shares go away. So you wouldn't have to pay anything to close it out if you are options trading yourself and you own shares and sell calls off of them. Let's just make sure we understand that. Bitmine Immersion sold calls this week at 50. They're 7+% out of the money. BitDeer calls are sold at 22. They are actually already in the money, 9/10 or 20 cents. So that one's going to be a tough one this week. Cash, another 5.3 million. We usually combine that with First American Government Obligation Funds, another almost $1.5 million. We slide it over here, total them up 5,300,000 in what I call dry powder. It's not actually. They've talked to us before. Sometimes it's representing the shares for like a spread that doesn't have any shares associated with it. All right, back to where were we? Cypher sold calls at 22. They're almost 18% out of the money. Plenty of room to run there. That means that stock price can run up by nearly 18%. We can capture all of that gain within our fund share price without having to pay to close it out. So that is that's some nice room to run for sure. A lot of times when they're that far out, though, you will see them close and sell a new strike closer to the money, allowing them to collect even more premium, but then obviously risking losing the trade a little bit more. CleanSpark calls are sold at 18. They're 1.1% out of the money. Coinbase calls are sold at 3. Oof. Oh, wait a minute. Somebody didn't do all their homework here, getting prepped. That would be me. I'm that somebody. I'm just going to update the sold ones for now, and then I will go back and correct the rest just to save time and not have to start this video over. We got a couple wrong here. Okay, so BitDeer's not actually out of the money. They're at 23. They're 3.6%, or they're not in the money. They're 3.6% out of the money, so that's a little better. CleanSparks were at 18.50, not 18, so they're 3.9% instead of that 1.1 that I said. Coinbase is sold at 3.75, 9% out of the money. Again, I'll go back and change the purchased calls after the video. Core Scientific calls are sold at 22.50. That's about 4.5% out. Circle Internet Group calls are sold at 130, 2.3% out of the money. iShares Ethereum Trust ETF, $30 calls are 2% out of the money. Galaxy Digital sold theirs at 36.50. They're 4.25% out. GameStop calls are sold at 23, 3.1% out of the money. Robinhood calls are sold at 150, 2.1% out of the money. Hut 8 Corp selected 55 as their strike price on their sold calls, 8.5% out of the money. iBit, right? So this is the long call that represents the shares. And then I actually want to add a percentage change there. Sorry, doing a lot of updating live time. I don't usually do that. $62 is where they've sold their calls on their call spread. They're actually in the money by 0.5% or 30 cents. Mara sold calls at 19. They're 4% out of the money. Mercado Libre's calls are sold at 24.50, 5.2% out. MicroStrategy, here we go. At least I'm catching it ahead of time now. They've got calls sold at 270 and 282.50. Whew, they are 0.1% and 4.8% out of the money. Likely that those 270s were sold prior to Friday, where MicroStrategy had a good day. NU $16 calls are 0.6% in the money, or 11 cents. Nvidia calls are at 207.50 and 217.50, 2.5% and 7.4% out of the money. Opera's calls are sold at 16, 8.5% out of the money, and 18, 22% out of the money. Again, these were the ones that were 11/21. They do not expire this Friday. I think, even though I said it, MBTX here, I think I just skipped it, really. MBTX put spread, selling or buying the puts, so it's a put debit spread, expires the end of the year at 255 is what they're purchasing. Stock price is a little above that, 1.7%. So those are currently worth $5.6 million. Let's come back. We finished up at Opera. So PayPal sold calls at 70, 1% out of the money. Riot has 22, not $24 calls sold. They're 11% out of the money. SBET, SharpLink Gaming, 1450 calls are 4.7% out. And finally, Block has calls sold at 77, 1.4% out of the money. On average, so if it's just a formula where I average out every single sold call, they're 5.7% out of the money, which would mean on average, everything could move up about 5.7%, and we could capture all of that upward move in our share price without having to pay to close out losing trades. Now, that is just an average, so that's not a realistically. It's just trying to give you some sort of average. Obviously, Cipher Mining can move up almost 18%, while IBIT can't go up at all. So if IBIT moves up, we don't capture it unless we close out these calls and sell a higher strike. Same thing with NU. Those are the only two that are in the money right now. All right, there's $228 million in assets under management, 6,475,000 outstanding shares. The NAV at the this is the weekend, so we don't have to clarify at the start of the day or anything like that. Everything is the dust has settled. We're during the weekend, so the NAV is 35.29 and the share price is 35.36. That's about average. It does trade a few cents above the NAV, a little bit of premium there. Again, last week's payment, 58.71 cents, and I think we're going lower than last week. So, but nothing. I don't think we're going to go that drastic drop all the way down into the low to mid 40s, but we will see. 53 is my guess. A lot of it does have to do with Monday's move as well. All right, next up, we'd like to talk about blocks a little bit. Now, it's not quite as easy to talk about them for a couple of reasons. One, they don't share their trades, and two, they don't update their holdings as quickly. So where if you go to LFGY's website on like a Saturday morning and download the holdings, everything that has taken place is all settled out and ready for the start of the week on Monday the 3rd. You see that? We've got an 11/3 date on the holdings for LFGY, and today's 11/2, because everything, they know the market doesn't move Saturday and Sunday, and so everything gets put in place. When you go to blocks, they don't update their holdings until the start of the actual day. So these holdings still say Friday's date. So they haven't updated from any of the, so that was how they started Friday. They haven't updated to the moves that they made on Friday. And so I have highlighted everything that is clearly no longer going to be within the holdings because it's expired 10/31. I leave it in there though to show you that they are options trading on those funds and the style that they're doing, whether they're selling puts or put spreads or calls or collars or whatever. But if we go through, I'll just take a look at each of the things within the fund and talk about what they're doing. So, but let's start by talking about the distribution. The most recent payment received was 18.45 cents. I don't even run the calculation on that. They pay 36%. If you take a look at XFUNDS and you scroll out to their announcements, here's the one they just announced for this coming Monday, 36% distribution rate. If you scroll to their previous one, last week, 17.43 cents, 36%. Okay, you get the picture, 36%. So it's always going to be 36%. Now, if I had a formula, it would always be based off of dividing the payment by the NAV or the closing price. Well, that changes every day, so it's going to make that percentage look weird. So just remember, you're getting paid a 36% annual yield. So they have announced, well, I just said it, 18.45 cents. X date was this past Friday. So if you had the shares on Friday and purchased them prior to Friday, then you will be receiving that 18.45 cents on Monday the 3rd. I do have some shares of them. I'm looking to get more. So far, if I'm keeping track of their payments correctly, since inception, which we said was back in June, they've paid about $2.87. It looks like they most likely started with like a $20 inception price. Obviously, the chart is going to be how things closed, but so realistic, if you bought them in June at $20, you're already up $5.23 in share price, plus you've been paid $2.87. So this is why Blocks has been so popular. They are doing very well. Outstanding shares, the most recent that we are able to gather from their holdings, which again is not fully updated, is 7,950,000. Their closing price on Friday, 25/23. To get their net assets, the only thing I can do is total up everything on their holdings page, which is outdated, and divide it by the outstanding shares, which could possibly be outdated. That tells you a NAV of 24.42. So clearly, their net assets is going to have to be higher, or their outstanding shares is going to have dropped. I doubt that one. So I think their assets will be higher than that in order to do the division to come up with the NAV, because it wouldn't be trading that far off. It's going to trade within pennies of its NAV. All right, now let's just take a look at what they have within the fund. There was actually a couple major changes. So if you've been watching these videos, I will point out those major changes. Bitmine Immersion, they're trading a put spread on that, selling the 46.50. Cash, they got negative cash. That's pretty common at different times, especially around X date. Cipher Mining, they so you've got your, in gray is the actual holding, and so under this column it will represent shares. If it's in white, under this column it represents contracts, options contracts. So they have 521,000 shares of Cipher Mining, and then they're selling different quantities of contracts at different strike prices. Looks like they like to do all put related options on Cipher. We are selling, looks like we're selling put credit spreads at every level. So these are already expired. Very likely that they rolled them on Friday to new ones. But what is definitely already out till next week is selling at the 20 and 22.50 strike price. Coinbase, as you can see, everything we're looking at is now expired. So very likely that they continued this strategy, though, selling put credit spreads. Circle Internet Group, these are up to date. All puts, again, all put spreads, selling 141s and 127s. Core Weave, all puts, all put spreads. So again, we'll assume that they continue that. Here's our first big change. ETHA, iShares Ethereum Trust ETF. If you go back to the previous videos, almost 40% of the weight of the fund was split between HODL, Van Eck Bitcoin ETF, FidelityWise Origin Bitcoin Fund, and iShares Ethereum Trust. So HODL stayed the same, right around 15%. These guys used to make up the other 25% of it, and now they don't. They've sold all the shares, and we can see where the money went because now there's $45 million sitting in government obligation funds. It's odd, though. They're still trading the options as if they have the shares. They don't synthetically have them, and they don't physically have them. So I guess we'll have to wait until Monday's holding upload to see what they're doing, what's going on. But kind of curious why they got out of all these shares. In any case, they are trading calls. Let's see, they're selling the 3050, they're buying the 3250, and buying the 20. So they're buying out of buying a call way in the money. So that's this is where I get a little out of my league. I don't know if this is like a call ratio spread or something along those lines. So if you guys are the big time options traders in the comments, I'm not sure what they call this, but they are buying two calls, one above and one below the sold call in the middle. Doing the same thing with FBTC, selling the 9650 and buying on either side of it at 80 and 101. We already talked about the money in the government obligation funds. Galaxy Digital, again, they've got some expired ones that most likely got rolled on Friday. That was a sold put credit spread, and they also already have in play a put credit spread selling at 35.50. HODL, they don't do any options. I'm not aware of whether there are options or not, but obviously that's a big name. Lots of people know. Hood, let's see, most expired, so most likely rolled. All put credit spreads that they're selling. So the only one that we do know for sure is in play selling the 148. Let me take a quick scroll the rest of the way. Nope. Okay, we do have some more calls. I was going to say, it seems like it's almost all put credit spreads, but Hut 8 Corp, same thing. Most of these probably got rolled, but we do have some put credit spreads selling the 50s and 54s in play for Friday. Iron, same as I keep saying, we have some puts sold at 66. Mara Holdings, puts are sold at 19 in this $2 spread. Looks like they had another $2 spread, most likely got rolled. MBTX, they don't own any shares or synthetic, anything like that, but they do trade. Let's see, they're selling calls at 57 and then buying, or what did I just look at? Oh, that was 57 contracts. Selling calls at 265, buying at 285, selling at 280, buying at 300. So those are call credit spreads, and those have already expired. So we'll most likely see new ones. But what we do see is, again, similar to what was there, selling of 265, buying of 285. That's a $20 spread. That limits you to the most you could have to pay to close it out is $20 per share. 100 shares per contract, 908 contracts. Strategy, we're doing a put credit spread, selling the 267.50, buying the 255. NVIDIA, a put credit spread, selling the 205, buying the 195. Riot, a lot probably got rolled on Friday, and they do have a put credit spread sold already for next week, selling the 22s. And Taiwan Semiconductor, TSM, had a put spread. It's expired. Most likely going to have another one. 297.50 was the sold strike price. Not that really matters. Okay, so my guesstimate is going to be right around the 18-cent mark. So 18 cents currently on the 25.23 would actually be 37%. But realistically, I think they used the closing price on Tuesday, but don't quote me on that. I think I saw somebody write that in a comment section, so that's not something I'm getting from XFUNDS directly or anything like that. But so you can basically figure out, take the the share price on the close, I think they said on Tuesday, and figure out what a 36% annualized yield payment would be on that, and that's going to be what your payment is. So I'm just throwing a guess out there, 18 cents. That's pretty much in line with the average, and so they would need a slight increase in the share price between now and then to get 18. Otherwise, it'll be high 17s. All right, that's all I have for you. Thank you for watching. Sorry to get this video out a little later than usual. I usually get it made Saturday night and just schedule it for Sunday morning, but that wasn't the case this weekend. So appreciate all the likes, shares, and comments. And I got a dad joke somewhere here. Okay, dad joke for you before we get out of here. All right, so I used to play the piano by ear. I'm not that good anymore. So now I just use my hands. I know, that was dumb. All right, thank you. Have a good rest of your day off. Hopefully you got some extra sleep with daylight savings time. I'm not a daylight savings time fan, but is what it is. We like it in the fall. We don't like it in the winter or in the spring. Well, we like it on the sleep part. We don't like it in the afternoon when the sun goes down before dinner time. So, okay. Good luck trading tomorrow, and I'll catch you in the next video.